Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, August 30th, 2010. Well, folks, here we go again. Market, after a fantastic rally on Friday, is selling off to the downside. We are seeing a small down day across the board. Dow is down 81 points, NASDAQ is down 19, and S&P 500 down about 9. Now, net, if you look at what happened on Friday with the massive rally, we're still up almost 1% if you include today's action and Friday's together. So it's still a positive move over the last 2 trading days, but we are giving back some of those. Now, why are we giving it back? I mean, that's the key, right? Why are we selling off today? What are we seeing in the charts? Did we hit major resistance? Not necessarily major resistance. I think more so the fact that the rally on Friday was more of a relief rally on Bernanke's comments, and obviously Intel, after warning, ended up going higher for the day. In addition, the GDP number, which was expected to come in very, very weak, came in better than expected. Granted, it was revised down, but still better than expected. So I think you had a very, very nice relief rally. It was a Friday. Fridays, oftentimes, they will drive the market higher to have it higher going into a weekend when consumers will be spending money. Remember, would the market be better off, or would the individual consumer be more likely to spend money if the market is up or down 100 points on Friday? Chances are they're more likely going to be looser on the purse strings if the market was up 100 instead of down 100, or up 200 instead of down 200, or up 300 instead of down 300. I think you guys get my point on this. So again, these factors led to a very nice rally, and most likely a short squeeze, squeezing out some of those shorts on Friday, which again sent the markets higher. Now you're looking at the SPY intraday here. Beautiful little chart intraday. You can see again the market inched lower at the open, gapping slightly lower, and then ultimately started to push up into gap fill. We came right to gap fill right in this area, and then ended up selling off. Little bear flag, sold off. Little bear flag, sold off. So you've just basically been having this sideways, light volume, slow sell-off all day long. Beautiful in spirit of bear flags. Now remember what bear flags are. Bear, just like the name situates or simulates, is a bearish pattern or a down pattern. You have a bear flag formation there, that's what you're going to get. Even on the opening start of the day here, what you can say is you had a gap down, which is the equivalent of a bar down, and then inside bars trading sideways to higher is an in spirit of bear flag as well. What do I mean by that? We'll take a look. If you just consider this gap down right here, and then the upward move, that's a bear flag. Then you have this move down here. That's another bear flag. Sharper down, sideways to up move, that's a bear flag. Then another move down, sideways to up, that's another bear flag. So bear flag after bear flag, ultimately the market has hit the 200 moving average twice now, once here, and it continues to hold weak. Now notice where this little pivot is. See this little pivot right here? Just below the 200 on this pierce and this low pivot. What I want you guys to do is just take your trend line, or you can even watch me do it, and draw it from this little pivot right here and draw it across. See how you came down right on top of it here and then right here? So you can see very clearly you are into some little bit of support, the 200 moving average plus this pivot low. If you get through this pivot low, more than likely you're going to go to the 105.80 level, 105.80 to 85 level, which will be a significant level, all right? And again, you can see the bear flag. Let me erase some of these lines so we can really get into the other technicals on the charts that I want to show you. But right now you do have a lot of good support here, folks, as again the market is inching into a powerful time frame right around here. And we'll continue to keep you guys fully posted on that. All right. Now, a couple other things to go over here. Obviously, we have this one little caveat right in this area, starting to get a little bit of a bounce. Good support here. The market has a good chance of getting a bounce off of this level. The other caveat to this is the volume is extremely light today. Volume is ridiculously light. As you can see down here, even compared to Friday's action, Friday's volume, even Thursday's volume, the first couple candles of the day were right here. The first couple of candles were much higher. You can see higher volume even at the start of the day. That's when we have the majority of the volume, and it's just died out. Generally, when you have light volume, it's tough for the markets to sell very sharply because there's always a couple, one or two bidders out there willing to take a shot, and that's enough to keep the market floating. As you can see, a nice pop here on the spiders, getting a right off that little pivot low. Again, draw your attention to this and the 200 moving average right together, and you are getting a little bit of a pop. You could even make a case that there's a channel development here, taking a look here from the lows to the highs. Look at the channel. chopping in and out of this channel to the downside. If this channel ever breaks to the upside, which again, all you're doing is connecting the highs of the day here, then you would expect to move back to the highs of the day. I don't really think we'll get there, though. Overall, the market seems a little jittery. After the one-day rally on Friday, it does seem like the markets just want to kind of go choppy sideways this week. That's my expectation. Remember, the unemployment report and non-farm payrolls will be out on Friday morning. I don't think the market gets a big move until we get that number out, and then even then, we have the holiday week, so it's probably going to be an hour and a half move in the morning session off of that, and then the markets will go to sleep and just trade sideways the rest of the day. So it's really going to be one of those interesting weeks. My expectation for the week overall will be a flattish week, especially into Friday. Then maybe we get a move on Friday morning. And then obviously the holiday weekend's coming up. Remember, next Monday's Labor Day. The markets will be closed for that Labor Day. All right, we're going to go to a couple other time frames here. Let's zoom out here to the 60-minute. 60-minute is very interesting because you actually have a little bit of a W-ish type bottom here, which is slightly interesting. You could be forming the V pattern here, which is slightly a bullish pattern. I think that is worth noting here. Intraday looks very, very weak. I mean, we've discussed the intraday, how weak it is. But then if you look at the W pattern here, it actually makes it look like it's a little bit more of a bullish pattern. You could even make a case that this upward move here, consolidating sideways lower in spirit of bull flag or the V pattern, which would signal a possible move up like that. All right, now again, I don't necessarily think we're going to go up that drastically. If we do play this out, I think it probably goes up to this area. You have gap fill right here at 107.10, and then a pivot high, which would be very, very big resistance at around 108.25. But we are looking at a possibility if this starts to play out to the upside is happening. If we go to the daily chart, folks, the bottom line is on this chart, just zoom out. This is the line you're holding from the pivot low of March 2009 to this pivot low, and that's what we're trading on right now as we speak over the course of the last couple days. And I'll zoom in and just again, you can see this blue line, slanted blue line, is the key to this chart. Now, what else is moving here? Let's go back to the charts on the intraday and cover a few different things. We see oil is lower today, although not drastically lower. It had an amazing move on Friday, just absolutely a tremendous move. I think this was much like a squeeze, a very good kind of squeeze of shorts. Shorts were very bearish on oil. Oil got rallied to the upside. Today you see a little bit of a gap down, just trying to trade sideways. In fact, a little bit of a triangular pattern, if you will, right there. You can see triangular pattern. Could break out up or down, but spot crude closes in about 45 minutes, so it'll end where it does. And again, I think overall we could be seeing this oil trade kind of just stalling out this week as well. Maybe trading slightly neutral to higher into the holiday weekend as drivers will be ready to go out in masses and travel. All right. Other than that, we see the dollar. Dollar is trading upwards today. Notice the pattern on the dollar. The dollar has gone higher. What do we know about the dollar? When the dollar goes higher, it puts pressure on the markets. The markets usually go lower. So an upward trend on the dollar. What do we see on the spiders? A downward trend, right? So see how it's exactly opposite of what the dollar is doing on the spiders. Spiders, again, mirroring the S&P 500. Downward move on the markets. And again, going back to the UUP, which is the dollar index, upward move there. Beautiful little chart to show the correlation between the dollar and the markets. Gold today. Gold is flat on the day, really nothing doing there. Now, with the dollar higher, you would expect gold to maybe be a little bit lower, but remember, there's still fear out there, and that causes people to buy gold, so they're negating each other and having a flat day today on that. Goldman Sachs continues to be weak. One of the key stocks I'm going to show you here before I end this video, Goldman Sachs, even on the rally on Friday, didn't get a bid. You got to watch this as a leading indicator, folks. Got to watch this. And again, we're following Goldman, JPM, Exxon, and Chevron as leading indicators for this market. Tech sector would be Apple, Computer, and Amazon, in my opinion. And again, we'll see where Goldman goes. Goldman very, very weak. Now, I took more profits, folks. If you're part of the research center, you made more money today. Take a look at this. COCO, COCO. We bought this as per the hot chart and alert, which is part of the research center. And again, it was given out as a live alert in the research center at $4.45. It is now currently trading at $5.18. I unloaded this for a 13.5% profit. Well done for those of you that had this. And again, it's just one more profit. Last week we had plenty of profits. This week we're having more profits. And again, I'll tell you this. We're steady. Steady wins the race. Slow and steady wins the race. Just constant profits. I'm not looking for home runs. We're just looking for consistency. 8 to 9 winners out of every 10. Let's make money on almost every play, and the rest will take care of itself. Bottom line. Join the research center. Join the chat room at inthemoneystocks.com. If you're a swing trader or an investor, the research center is what you want. If you're an intraday trader or if you want to really get learning on the technicals of the charts, the day trading chat is for you. Take care, folks. We'll talk to you soon.